Happy Monday to you. I'm Marlon Bowling with you with a look at our ag commodity trade on this, the first full trading week of 2019. Thank you so much for allowing us to be a part of your day. We look forward to talking with you. This time around, we have a little extra help from Jim McCormick of Allendale, Incorporated in McHenry, Illinois. And let's take a look at what to expect here in the grain market. First of all, to start out this week, I assume one of the top item stories on the agenda is going to be the partial government shutdown and its impact because of the fact that we won't get our major USDA reports this week.
That is correct, Marlon. I mean, it's definitely disappointing to the trade. We've been looking for this information for a while. I think I personally looking for some bullish news on the corn side of the equation as well as the wheat acre side of the equation. So it's definitely disappointing to do it, but now we just got to deal with it. It looks like they'll release it about 5 days once the government opens back up, hopefully sooner than later. The near-term thing, probably the next 24 to 48 hours, we're going to talk about is how these China talks between U.S. and trade negotiators are going. The Chinese top economic official kind of showed up unexpectedly yesterday, and hopefully that's a good sign that we're going to make some progress.
Now, they are starting their negotiations already. Is that correct here this week?
That is correct. It's Monday, Tuesday, so technically it'd be last night and tonight. And the early talks are that both China and the U.S. officials are saying they're making progress. Now, if they can make progress, this is going to lead to another round of talks with Lexinger and some higher officials possibly next week. And then they're saying if that really goes well, there is hope that maybe Trump and the Chinese president will meet in kind of a sidebar at the World Economic Forum in Davos here at the end of the month. So, we'll be trading those headlines because without the government numbers, essentially we've either got trade talk or weather. Those are the two things the market's going to kind of key in on, at least on the agricultural side of the equation.
Now, I would imagine that even though we don't get the USDA data this Friday, and it was going to be a slew of data, we will still have some private analyst estimates maybe work with. What else is going to be driving the market here this week?
Well, right now, I think the weather is going to be kind of a key for South America. They've been a little bit too dry in northern part of Brazil, a little bit too wet in parts of Argentina, and that's kind of put some weather premium back into the market. A few months back, or 30, 45 days back, Marlon, a lot of people thinking a 125 to 130 million metric ton crop out of Brazil. Compared to the 120 crop they had last year, the USDA's last estimate was 122. Now a lot of traders are coming below 120, and some are down to 115. So it's not a disaster by any stretch of the imagination, but it is getting a little bit smaller, which might put a little bit more pressure on China to cut the deal to buy the U.S. beans.
Last week we heard a lot of rumors about the fact that, there was optimism that China would come in and buy more soybeans, but we were starting to hear more and more in the rumor mill about the fact that China may come in and buy corn and DDGs and maybe even some wheat. What do you hear in that scuttlebutt mill this week?
Well, we're hearing, 3 to 5 million metric tons is kind of the number I've been hearing for the corn. A lot of people are thinking that purchase, if it does get done, probably will not happen unless we really are making progress on the trade negotiations. But I tell you what, Marlon, if they would come in here and buy 3 to 5 million metric tons of corn, I think you'd set this corn market on fire. The funds, I think, will be looking for a place to put money. Corn is relatively cheap compared to recent history. The U.S. stocks are very tight, and plain and simple, we don't have China dialed in to buy 3 million metric tons of corn. So that would definitely be a bullish situation if it does happen. So hopefully it does for the American farmer.
Okay, Jim, we'll come back in a moment. We'll talk about livestock, too. We're talking with Jim McCormick of Allendale. Don't go anywhere. We will be right back. We are talking with Jim McCormick of Allendale Incorporated in McHenry, Illinois, and want to turn our focus now to the livestock trade and ended on kind of a tough note Friday afternoon when the markets closed up on that short trading week. Overall, I believe last week was just kind of I hate to call it a failure in the markets for the cattle and the hogs, but they did not necessarily garner a lot of support technically when you look at the chart patterns there, Jim.
Yeah, it was definitely a disappointing week. I mean, we put the high in on Monday, then we were closed for obviously the New Year's holiday, and then came back and we slid the whole week. It gave you again outside week down on the chart pattern. So it's definitely turned the near-term chart sour. Cash traded steady last week. I would guess steady is going to be what they're going to offering. That may be a tough sled near term, as like I said, that chart picture looks like it could be a little bit more pressure near term. I think the funds just got a little bit ahead of themselves. I think a lot of people are excited. We've had a lot of crummy weather, plain and simple, and the gains weren't going well. I think there's some optimism. Maybe China will come in and buy some beef or pork due to their African swine flu outbreak on these, if we can cut some trade deals. And cart just got a little bit in front of the horse a little bit, and I think we'll pull back. I still think we got a long winter to go, so hopefully we got one more push up in the cattle. We did this last year. We topped early in the year, pulled back, and then made that secondary high and made the high for the year on another push up. So typically the cattle market gives you two chances to sell, so hopefully that'll happen again this year.
We talked about this a little bit on our Commodity Wrap show on Rural Radio just a few minutes ago about the fact that on the cattle, on the charts, it appears that it traded below that uptrend line that's been in effect for quite a while and has basically violated that line. So what does that mean now moving forward?
Well, right now, like you said, technically taking out that uptrend line, that is definitely a little bit negative, and that's probably going to trip out some more liquidation by some of the links at this point in time, and we might pull back a little bit this week. But I think long term, what will happen is we get another storm front, you'll flip it back around, hopefully by the end of the year, by the end of the month into February. But near term, you're going to definitely see some technical pressure, I would guess, as some funds exit due to breaking that long-term trend line, which is definitely disappointing.
Heard somebody mention that. You were talking about the weather, and I just heard somebody mentioning over the weekend the fact that, you get in the plains and the, part of the Midwest there, and the weather is fairly mild. I know it's kind of soggy out there in parts of the western Corn Belt, but they had expressed kind of a fear that there's some making up to do for a harsh winter when it comes to cattle production. So we will have to keep an eye on that. Jim, as always, thanks for talking with us this morning to help things kick off for our opening session here. That'll be at the bottom of the half hour here. So thanks again, Jim McCormick of Allendale Incorporated. He's based in McHenry, Illinois.